Hello, it is Evan here from the Trade Risk, and this is your stock market weekly update for Friday, January 26th. We got lots to talk about. We're going to dive right in. Hopefully, everybody's doing well out there, and let's get into it. So, top of the news from this week, GDP coming in at 3.3% annualized in the fourth quarter, above expectations. I know everybody looks at that number a little bit differently, so I will leave it at that. Energy stocks, though, were the leader this week. So remember, energy stocks, they are actually a component, a very small component of S&P 500 and these indices at this point, but they came roaring back. Oil was breaking out, resolving to the upside. We'll look at those charts in just a little bit. We've got 5 of the 7 magnificent 7 stocks reporting earnings next week, which frankly is, kind of the only thing that matters in this market. It seems like this is really dictating kind of everything of the big movements anyway. And we'll see how much of this run up is priced in. I'm sure everyone at this point is expecting probably pretty decent numbers. It's really going to be that reaction and what kind of guidance and how the market interprets the run up that a lot of these stocks have enjoyed. Innovation stocks, on the other hand here, so the small cap or mid cap kind of speculative growth, Cathie Wood type names continue to lag. We're going to look at those. We got Bitcoin trying to carve out and find its footing on some type of short-term bottom. We're going to look at that chart. Oil, as we talked about, breaking up higher, and we got some volume coming into Chinese equity. So lots to talk about. Stick around. All right, here we go. We've got Warden TC2000. That's the trading platform we're using in this video. For you TC2000 users, if you need assistance with this platform, if you need things built, custom indicators, custom stock scans, any of the good stuff, reach out to us. Let us know. We do support the platform through and through. If you need tech support for this platform, we can help you out here at thetraderisk.com. Let's get into the numbers now. Right-hand side, 1 week returns green across the board. Pretty even race. Really, it was, I guess I should say, the Russell 2000 did play some catch up this week. It was up almost 2%, 1.84%. That's nice. That's good to see. The Russell 2000 has been lagging over the past, call it, month or so. In fact, you can see it right here. 1 month returns. Russell 2000 is the only thing kind of standing out here, kind of firmly in the green, in the red at -4%. If we take a look here at volatility, not changing too much this week. Basically, Nasdaq vol and S&P flat, just down fractionally here. Of course, earnings season, going to keep maybe a slight bid under volatility right now, but that's not saying much given the fact that the VIX is at 13.28. If we take a look here at sectors, though, you can see most things in the green. However, the things at the top of the list here, energy, the bright spot, 5% to the upside, communication services up almost 4%, and then financials up almost 2%. So a little bit of a different guard up there in the top 3 performers. On the downside, we saw consumer discretionary, thanks mostly to Tesla. We saw real estate, and we saw healthcare. If we take a look at those trends, in terms of what has changed this week, this is our Trade Risk Smart Trend filter. So this measures price and volume spanning across time. There's some price action rules in here, but this is an indicator for TC2000 users. We also have it for TradingView users. So shout out to them. If you want this indicator, you can get it on our website. But if we take a look here at what changed, I mean, consumer discretionary kind of still in this rollover mode. Real estate really sort of rolling over, getting those red dots printed there, which is essentially just a sell signal, a bearish signal. Same thing with materials. But really, kind of the only other changing here on the upside is energy. You could see has been kind of in this bearish disposition here on the daily chart, and now it's starting to move up. It's not printing green dots. Coast isn't clear. It's still kind of yellow, murky in the middle, but certainly is trying to shape up this week. If we take a look here at market breadth, you can kind of see what's happening. It is more positive under the hood, I would say, just generally speaking. If we take a look at the number of NYSE stocks hitting 52-week highs and those stocks hitting 52-week lows, you can see that we are getting throughout this week a little more of a flare up here in the firm kind of triple digits, 400 to 500 stocks per day in the NYSE hitting 52-week highs. That is nice to see. In terms of stocks hitting 52-week lows, a lot lower, down in the kind of just the 20 to 50 range. So that is good to see. Again, we always like this ratio to be skewed more onto the bullish side, of course, if you're bullish on this market, and we love to see more of that breadth expansion continue here, and that will certainly be the case if we see the Russell 2000 continue to put up outperforming weeks. One other note here is percentage of stocks over a 200 period simple moving average. Certainly getting back up towards these cycle highs here. So now almost 68% of stocks are above their 200 SMA. It's a pretty impressive ratio historically on the higher end. Now, if we take a look here at Investors Business Daily's top 10 stocks, shout out to IBD. They sponsor the show. They help make the show possible. You can get access to this IBD 50 list, get a curated list of stocks up to date every single day with a link in the description of this video. But you can see GCT, which has been their number one stock, continues to be putting up the strong performance here, 28.74% up this week. It really did kind of dominate this top 10 list. Everything else was a little bit kind of single digits. Again, I don't want to scoff at 2% moves, but when you get something up 30% in a week, that really sort of shines in terms of the curation there. Now, if we take a look here at sort of our commodities lineup here, you can see that oil was the big standout this week, up 6.22%. It sort of needed it. I mean, it's been going sideways. It's been kind of, over the last quarter or so, it's been really nothing but down to sideways and choppy. And now you're finally getting a little bit of, no pun intended, energy to the upside here for USO. Agriculture also doing well again, 2% to the upside. Copper was up. Bitcoin up on the week, 1%. Same thing with silver and the dollar index, all while managing to close higher as well. So in the face of that, all these commodities up. Natural gas, though, unfortunately, still down 3%. If we take a look here at Treasury yields, rounding out our macro view, you can see was kind of a flattish but slightly up week for most of the maturity curve here. You can see the 30-year was up kind of the sharpest this week, but still kind of in this what could be, some type of retracement leg up, which, if we, I think the bull case here, just looking at the 30-year Treasury yield, is that this trend reversed back here in late 2023 in November, October. We topped out, we broke down, and now if we're putting in some type of retracement leg, some kind of bear flag, let's call it, if you want to put some technical jargon over it, and then eventually this rolls over, it's certainly going to be the good case. If it just starts roaring back up and we start, reclaiming the trends here of our old Treasury yield slopes, then we're going to be in a slightly different market conversation, I think, in terms of what equities are doing as well. So let's get into it here with some of the price action now. S&P 500. What's impressive is when we look here at the S&P 500 chart, you really just have to appreciate this. It's not easy to appreciate if you're not involved in it, but 12 out of the last 13 weeks in the S&P 500 has been higher. We've only had one down week here. It was to start off the year. It was the week that kind of maybe tried to throw everybody off the scent. And it has just been nothing but up since November, since the end of October into November. This has been just a straight march higher, 2 all-time highs, which we rang the bell for last week. And it continues to just be a very, very impressive ascent here. Of course, we are, kind of overbought on lots of different metrics. Could we pull back? Should we pull back? Absolutely. We have every reason to want to, pull back now a few percent. But of course, that doesn't mean we have to. If we put on Bollinger Bands here, you can see they're expanding nicely. Trend is up, all-time highs, no overhead supply. It's, really just kind of a nice sweet spot for the market to be in. As we said at the top of the video, we've got four of the Mag 7 stocks reporting next week. So this is certainly going to have an impact here on the S&P 500, on the Nasdaq 100, because most of them are just tech stocks. So let's pay attention to that, right? Let's not get too complacent here. There's a little bit of complacency out there. You can see that S&P 500 over the last 2 days kind of went sideways here. So you're kind of setting up for something where, if we take off these Bollinger Bands, you can see that, we are sort of setting up here. It's just going a little bit stagnant sideways here. It could be a nice, a nice little drop here, just kind of a little bit of a take the froth out of this market. If we see a little bit of a sell pressure day, maybe ahead of some of the earnings, right? Just folks maybe locking in some gains, protecting open profits, and maybe hedging a little bit into a big end of week earnings week that is certainly in the cards here. So if we start breaking below, say, Thursday's lows, then, I think you could get a quick whoosh down to around 4,800 or so, kind of retest the old December, January resistance here. And that would make a lot of sense to me. Otherwise, I mean, look, things are pretty darn good. It's tough not to like this chart right now. Again, a little bit frothy, but it comes with the territory. Now, if we take a look at the Nasdaq 100, again, kind of the same thing. I mean, this is almost what you could say is kind of perhaps leading leading what maybe will happen to the S&P 500. You can see the Nasdaq 100 did close negative on Friday, down 0.6%, and you can see it did take out and close below Thursday's low. So it looks like this wants to kind of come in a little bit, maybe retest and kind of come into the low teens, the 410 area, and maybe before earnings. Again, people locking in profits and just kind of sidestepping a little bit of the event volatility later next week. So that seems pretty reasonable to me. I mean, longer term trend is up. It's going to have to just really fall a lot further below, kind of 405, 400 or so before it really starts doing damage and falling back below the old 2021 highs. But you can clearly see, again, with this weekly candle, there's a little bit of, maybe some profit taking, and we had some mixed earnings reports. We're going to talk about some of them out of Tesla, out of Intel, and some things that are giving maybe the Nasdaq 100 a little bit of pause here. So a check back, a range bound behavior makes sense to me. And then finally, if we go to the Russell 2000, I mean, this was the best performing this week. You can see just a whole lot of sideways. I mean, most of the profits this week, in fact, pretty much every, basis point of profit came off Monday with the gap up in the Russell 2000. It was up 2.14% on Monday. And then it was basically chop, 4 days in a row, super sideways here. So this is looking like it's primed, kind of coiled, consolidating here for some type of move up or down. If we want to continue to see those breadth numbers post up, we want to see a breakout, maybe a little bit of changing of the guard, right? A little bit of sell off here out of the Mag 7, out of big mega cap stocks, and rotate into the Russell 2000. I think that'd be a wonderful thing for the market, for the health of the market. We'll see if it happens. Russell 2000 continues to be sort of the dog in this fight. It is at the bigger sort of upper end of this range, as it has been testing and battling against for many months. So that is the read there on all of the majors. Let's run down the list on some other markets I wanted to talk about. Next is, let's go to ARK next. So as we sort of mentioned here at the top of the video, one of the things that continue to lag in this market environment are really these innovation stocks. And this is an active ETF, so it's not a static ETF. So holdings are changing in this constantly, but you are still seeing the, kind of the sideways grind here. We had a wonderful run in these types of stocks in the fourth quarter from November to January, and now they are sort of in pullback mode. And really, this still technically looks pretty healthy. I mean, we went from November lows to December highs. We were up 61%. Again, I'm just looking at ARK. And then if we say, okay, a correction of 16%, this looks pretty good. You just don't want to see it continue to break down. You don't want to start giving back 40, 50, 60% of the move. Then you're just stuck in a range, and that trend was sort of all for nothing. So interesting to watch. Again, a lot of these companies under earnings microscopes coming up. Let's pay attention to them. They're not participating, but I do like the potential prospects here of trying to hold in around 45. Again, I'm generalizing using the ARK ETF, but you can pick some of your small cap growthier ETFs as well. Let's take a look at some earnings here. So we've got Tesla, which reported earnings on Thursday, and of course the market didn't react too favorably. The quarter, generally speaking, was pretty messy. It was just comments in general by CEO Elon Musk, and then just the numbers themselves, basically kind of, you know, saying that the stock is going to be sort of in the purgatory here for the next couple of months, perhaps. Outlook, you know, longer term still seems, you know, in the right direction, but for the short term and with no guidance given in this following year, I mean, there's just really a lot of uncertainty here. So the market did a pretty good job, but I guess not good enough at pricing a lousy quarter in. I mean, this was one of the only Mag 7 stocks that was just continues to head lower as everything else goes up. So this was not participating in the new all-time highs. In fact, this has been in consolidation mode since 2021. So Tesla looks like with this big gap down and some of that uncertainty over it, probably is will be coming down into the mid 100s here, would be my guess. Again, I have no dog in this race. I'm not trading it. I'm not shorting it or anything, but it seems like it just is kind of broken in the short term here, and is in the penalty box. Opposite end of the spectrum here is Netflix. So Netflix, pretty good numbers. I guess really should say above average numbers, above expectation numbers. It's up 18% this week, heavy volume, and very quickly now coming back into its former highs here. So remember, this peaked off, had a severe drawdown of 76% from its $700 share price down to $165. So it has been climbing from the dead here. Almost looks like a Meta, as it again was just really kind of crushed and then has just been V-shaping back to the upside. Good numbers. It's certainly in chase mode here. It's tough to want to, jump aboard right now, but it looks like it's got a destiny with retesting those highs. And then if we look again on the flip side here is Intel. On Friday, you could see was down 12%, and heavy volume kind of breaking its uptrend. This has been in kind of this steady up mode throughout 2023. Of course, you know, it sold off again aggressively with a 65% drawdown from its former highs, but Intel, little, shakier here, I guess, in the short term, but still structurally trying to hold up this uptrend, has posted some very strong gains in 2023. Now, that's some of the big companies. I mean, there's lots of other things, Visa and everything in between that reported this week, which we can't go through all of them. I do want to touch on Bitcoin. So Bitcoin here, which it looks like TC2000 introduced a Forex pair here. Okay, so Bitcoin, we're looking at the spot price, so we're not looking at the ETF here, but clearly now you can see with today's session, which is still in progress here because I think this is real time, pulling in back over almost 42,000. So it's working on a 4 or 5% session right now. Bitcoin, was on this slide. It did penetrate and break finally below this 40K level, and it got kind of eaten up. It looked like a little bit of a accumulation kind of bridging in here for a couple of days, and then we got the nice launch pad above it. So I do like the washout here. I like the uptrend. I like the potential future flows of ETF catalyst for Bitcoin, and I do have a position in it. So I'm looking for it to at least hopefully stay in this range and not just roll right back over. That's obviously going to be a pretty bearish signal that would get me to sell some if we just roll right back over. But for now, we got the undercut, we held, and so far so good. Let's talk quickly about China and the volume coming in this week. Take a look at the heavy volume coming in here. So we talked about it last week. It's beaten up, it's hated, it's nobody wants to touch it, and we got the nice kind of rebound, kind of bullish engulfing bar here in the FXI. You could also look at KWeb, which also put in some heavy volume. We could also look at individual stocks like Alibaba and right down the list. So be interesting if that marks some type of bottom. No position in that myself. Oil, we did talk about briefly, but there is the move up this week. So 5-day move up 6%, still kind of in this broader consolidation, but nice to see it kind of hold the line here and resolve up. So that's what I got. That is kind of everything I think I wanted to talk about. If we take a very quick look here at our strongest and weakest, energy was the top of the list. And again, like we just mentioned here, if we look at some of the stocks this week that were leading, so I'm looking at all energy stocks. This is our strongest and weakest layout here. So this is just a list of energy stocks sorted by the strongest from the week. And you can see this new star at the top of the performance here was up 20% this week. You can see right down the list here, all these stocks, as as I cycle through them. Energy stocks that were leading this week. Most of these names, again, have been sliding and beaten up over the last month or two. I guess not this one, but certainly many others have been in that position and are now rebounding. So nice to see energy getting a little bit of love. So that's what I've got. Let me know, as always, your thoughts and comments. What are you looking at this week? What did I miss? What are you thinking about the Qs here? A little more weakness coming in. What do you think about those earnings reports? Anything that you feel is valuable, do share below. And as always, I want to thank you for tuning in every Friday. Long form market analysis just like this. If you like the video, subscribe. If you love it, share it out. And hope you have a great weekend. We'll see you back here next week. Take care.